Alrighty, and we're on. Hello, Tim.
Hey, Johnny. Thanks for having me.
So thank you for being on the show again. It's round two, and quite funnily enough, so it was just over a year ago that we last caught up for a podcast, I should say. And I thought where we'd start today is actually just reflecting on the year that was.
Wow.
Because it's been a pretty big year.
It has definitely been a big year in many ways.
So I guess for those of you, who are only listening to this episode, Tim and I did a previous episode where we talked a little bit about Tim's, growing up and how, a bit about the Airtasker journey, but I want to actually get more into the nitty gritty about that today. So I thought where we'd start is let's look at just this last 12 months and then maybe we'll pull it back and we'll just look at the last 10 years. All right. So from the last 12 months perspective, I guess, the most recent event is obviously Airtasker going through its IPO.
Yeah, that'd be the biggest one. That was only about 10 days ago or something. So
I guess while that's fresh in your mind, talk me through that experience. Like, what was that like emotionally for you?
Well, I think that the IPO, even though, in some sense, for me personally, it wasn't really like an exit or anything from the business because, and it often is. An IPO is kind of, that's what your end point is. And often people walk away at that point or, they've cashed out and they've made some money and stuff like that. For me and actually for our major investors as well, it wasn't actually like a cash payday in any way. It was actually just a transition from being a private company to a public company. And, there are a lot of benefits that we see in that, in terms of being able to access more capital faster. And of course, being able to give our employees and our taskers an opportunity to own part of Airtasker. So those were the kind of the advantages for us. And it wasn't, this big, exit. That said, it was, it's definitely a big milestone for any kind of founder to really kind of feel like, oh, I actually created something, and, it's an important time to stop and smell the roses. So we did do a lot of that. And by smelling the roses, I mean, we had a huge party and all the staff had a good time.
Yeah. It's one of those things, I think, having done that with a company, right? Like you join probably a very select percentage of people in the world that have seen that through to fruition, right? I'm sure there are lots of companies that have grown to that stage over generations and then become listed companies. But we're talking about in almost a very short period of time, right? So I guess if we go back, 12 months ago, I think you and I were having a bit of a commentary about, this whole COVID thing that was about to happen. And I think that day you had actually been trialing with your staff to the ability to work from home. What sort of, I guess if we go through it from a month-by-month perspective, like, what was going through your mind and I guess what were some of the impacts to Airtasker, as a result of COVID?
Well, it's actually interesting. If I fast forward just a little bit further back than 12 months to sort of January of 2020, I was actually in Beijing on a holiday at the time. And I don't think, we realized the magnitude of it because I think we were just sort of sitting in my wife's grandparents, home. And they're like, oh yeah, hey, there's this thing called like the coronavirus. They're kind of shutting down, a whole city in Wuhan. And I think they're going to ask like Beijing, city of 26 million people. I think they're going to ask us to shut down as well. And the next day they're like, no, they've asked us to shut down. Let's cancel lunch. We'll stay home.
Really?
And, the whole city of Beijing sort of just closed down. And I don't think, until then I hadn't kind of realized the magnitude, but it was obviously big in China. Then we came back to Sydney and it had not hit home at all because this was still sort of like early February. And everyone was like, oh, that's a China thing. Don't have to worry about it here. But in mid-March, it obviously became, huge in Australia. So we our first action was, think about the safety of our Tasker community and our staff. And so it quickly became sort of, everybody working from home in Sydney, in our Sydney office and then in our Manila office and making sure that everyone got the standard information and they were able to keep working from home and, stay alive. And then also to get access to things like counseling and, because it's a big transition. People, coming to an office, I think was a big part of people's lives and that just suddenly changed.
That social aspect, right?
For sure. Like, and, you know, some people, you know, for people who had families and things, I think for some of them, they were like, oh, this is great. Like, get heaps more flexibility. But I think back to, you know, if you'd been a 23-year-old or 24-year-old, and this was a big part of your social life, now you're stuck in an apartment potentially, you know, by yourself 24/7. It's pretty intense. So, you know, we kind of thought about all those kinds of things. And then the second thing we of course thought about was the marketplace and how we could keep all of that still running. And so there was a lot of work to be done in that. And then I think the third thing was like, as a business, can we stay financially in business? And, you know, now that we've kind of been through 2020 and it actually turned out to be our biggest year ever in terms of growth from start to finish. But at the time, it was definitely not a given at all. In fact, we were quite terrified of, you know, what the potential negative impacts of COVID could have been. I think at a very high level, you know, Airtasker is an in-person marketplace. You meet people face to face, and you know, you get stuff done together. And in the case of a pandemic, you know, we thought we could have been all over. So we had to prepare for all of that too.
So was there? Because I'm thinking back on my business as well. So at the car dealership, you know, we had a very open discussion with our staff, you know, towards that tail end of March as well. And actually, you know, I was away for Chinese New Year. So my wife and I and the family, we were in Malaysia, and very similar story. You know, there was talk about this coronavirus thing, and my cousin who's a member of parliament over there, you know, when we caught up, I was asking him, is this usually Chinese New Year? Is that usually a quiet or a busy time for you guys in Parliament? And usually it's meant to be like a quiet time. But they were already assessing, okay, well, what is going to be our coronavirus response? You know, how are we going to handle this? Because, you know, there's parts suppliers, there's manufacturing, there's all these sorts of things that they're thinking about from an industry perspective that I think, you know, for us people who aren't in those capacities, we don't really think about that, right? And so when, you know, things started to really take that really negative sort of spin in the media, you know, we had to gather all our employees and say, guys, you know, this is the plan. I was in a very odd position because our business couldn't qualify for JobKeeper because I'd grown the results in my time there versus the previous time, because the year before I wasn't at that business yet. And so that was interesting in itself. You know, at first we thought, oh, you know, we'll try and work out, you know, how we can qualify, and then in the end, no matter what I could do, I could not qualify because the growth had been
successful.
Yeah, it was.
It's good, but you know, it is a genuine kind of like backhanded compliment, isn't it? You're like, oh, awesome, we're up.
Yeah, we're up.
Great business.
Here's a kick in the teeth. So then, you know, we had to gather all our staff and say, guys, you know, we're going to have to change the rostering and obviously, you know, the intention is to try and keep everybody. But to me, I really felt like a change in the atmosphere around just post-Easter. And I don't know what it was. So we as a car business, you know, we had started shutting on Sundays, which, you know, is almost sacrilegious in the car industry world. And then after Easter last year, I made the decision that, hey, we're going to reopen on Sundays. And Sundays have actually been, you know, a very successful day for trading for us. And I think that's given to the fact that, you know, families and that can come out, they don't have kids sport and all that sort of stuff. And the rebound was just, you know, one of those things that happened overnight. And May and June were terrific months for us. Was it similar in your business? Like, was there an initial sort of downturn where people were nervous, or did you find straight away that instead the market had just shifted, and then where there was gaps from particular, you know, sectors or industries, those were fulfilled by new opportunities?
So it's so interesting because we get pretty granular data, you know, being a purely online business, you know, we're looking at sort of like individual transaction data on a hourly basis. You know, we can see all of that. So we noticed a couple of things. The first was that I completely resonates with me, this idea that at the beginning of the lockdown, it's kind of like fear and unknown. And so for us, that resulted in a depression in marketplace activity. Like people just started going, well, I don't know, like could corona, could you turn into a zombie if you get corona? You know, like nobody knows. Like, and genuinely it was that scary, right? This could be the end of humanity, you know, like that sort of vibe going around. And so we saw a marketplace depression in sort of March of 2020. But then we saw something that was quite interesting. What we saw was that consumers started demanding different kinds of services. And taskers, our service providers, were able to just, they're empowered to go and solve that problem in whichever way that they see fit.
Yep.
And so, basically we saw overarchingly the marketplace adapt to the changing situation. And not only did it adapt, it actually started to accelerate. And I think what's happening there is that because Airtasker is built on essentially user-generated content, like the customers define the problems, the taskers define the solutions. Airtasker could actually respond in these times of rapid fluctuating change. Because if you think about, imagine if like Tim Fung was the person who told the taskers how to do the cleaning, then, if something changes, it's actually, the manager or the company that has to change. But in this instance, it was actually great because we knew the incentives are aligned. Our taskers want to work. Our customers still need things done. They just need them done in a different way. And so we could actually just sit back and watch the marketplace adapt to this change. And it was actually genuinely quite inspiring. We saw a lot of our taskers do things differently. They even, a lot of people even started offering services remotely that were traditionally done in person. And so it was this great, this great evolution of the marketplace, and it kind of proved the adaptability of the business model.
So there's a real shift in that consumer behavior as a result of different requirements being coming to the fore, right? Like,
for example, people didn't need like domestic cleaning because they were at home, and I guess they could do it themselves. And people probably don't want to, if they're working from home, they don't want to have cleaners there at the same time. So some of these categories which were large sort of dropped significantly. Moving homes definitely dropped for a few months. With the real estate market sort of just seized up. But then things that increased were things like home IT, because people are like at home now and they need IT services at home, or like fitness training online. People were doing like remote, telehealth sort of services. And one that was really interesting for me was bike repairs. So we kind of, I should have bought some shares in a bike company or something, because we could start to see we're like bike repairs increasing, like I think in 1 week it was like 400% up on what it normally was. We're like, how does bike repairs relate to a pandemic? But I think if you follow the chain of logic, it's like people don't want to travel on public transport, so they were buying bikes. But you just wouldn't think that a bike company would be the beneficiary of a global pandemic.
Well, I think that's very much like the car industry. We were quite fortunate, being with BMW, and it's a premium brand, right? So people weren't traveling. So as a result, they had more money for either renovations at home, and I think, that's been evidenced by, the boom in construction and building work and that kind of thing. And then on the flip side, people had the opportunity to then trade up, with their vehicles, whether it's, for having that vehicle that can then do the leisure activities, like your four-wheel drives and those kinds of things. And I think, hence why, the second-hand market also had a bit of a boom, is because people wanted personal mobility. They didn't want to have to catch the train. I think there was a couple of times, during that period where I jumped on the train and I it's peak hour and I'm looking around and it's like there's two people in this carriage. What's going on?
So was 2020 like a boom for the car industry? I know that second-hand cars are sort of up in value in some sectors, right?
It's one of those ones where it's an anomaly, right? And I think, as I said, I think there's some factors around that where people couldn't travel, and so the money's getting placed into other things. And I think we see that in house prices as well. People are able to save more money. When we don't spend as much money on hospitality and entertainment and those sorts of things, because they're the ones that obviously were hit the hardest. And then on the flip side, that sort of channeling of the money, instead of going into those sectors, is sort of flowed into other opportunities and businesses. So I think, any business that has, and especially, the Airtasker business being so adaptable and so consumer and tasker driven, I think that gives you that added flexibility of being able to, I guess, treat the market like water, right? And it's just going to flow wherever it needs to go.
Yeah, I mean, it's really interesting. We've got a two-sided marketplace. So we obviously look at things like consumer demand, but we also look at the supply side of the marketplace. And one thing that we do think is going to be very interesting is that during COVID, one of the impacts to the supply side of our marketplace was migration. So you've got less people sort of coming into the country and looking for new ways to work. And then you've also got, a lot of stimulus out there. So, incentives to work, were potentially depressed during that period. So we think coming out of COVID, there could be some really interesting tailwinds that we've got, but as some of those issues slowly unwind.
Yep, absolutely. So then, okay, so if we go forward a few months in the year, and I guess talking about this IPO, right? So at what point in your part of the journey had you sort of flagged, hey, I think we might try and do this and pull off this IPO? Was that something that had already been in the back of your mind for a few years, or was that something that was more sort of let's put the wheels in motion at this point in time? Or
so it's so interesting because actually we did foreshadow in sort of January. We're like, we have conviction that being a public company will be the best way for Airtasker to realize like a liquidity event and give a return to our shareholders. And the reason why we thought that is because Airtasker's got an absolutely massive mission and addressable market that it's going after. And so we really believe it needs to be an independent company that goes after it. Like, so we're not going to sell to, some other company and just become a division of another company. We're like, no, what we're doing is sufficiently large and important for the world. We want to stay as an independent company. Yeah. So we had
people. So you need the people input, like the buy-in, right?
That's right. Yep. So we said, an IPO or a public listing would be great. We knew as well that, the vast majority of our taskers and our employees are based here in Australia. So we wanted to do it on the ASX and, get that visibility and that opportunity for the locals to own a local company. So we had always foreshadowed that, but certainly during April, May, June, the last thing that I was thinking about is, growth and, scaling to the next level. It was more kind of like survival mode. Like, have we got everything in place to maintain our business and keep running? But as we got more confident with that adaptability of the marketplace, and we could see volumes and growth coming back, faster than we had before, it was kind of in July and August that we started looking at the equity markets. Yep. And it was so interesting because, counter to most popular belief that, you were going to see, it would seem that if you have a catastrophic world event, you would probably see a drop in the stock market. Yep. But it was actually kind of going the other way. Yeah. And, it's hard to follow all the different dynamics, but I think that, some of the changes were, that retail, like individual investors were more and more being able to access the stock market. Yep. Also, as you mentioned, there was a lot of spare money that people had that they were putting into different things. Yep. And so we could see the stock market sort of starting to rally. And all that did was kind of tell us is that the opportunity is there. The market is open. And so that was kind of floating around in the back of our head for a couple of months before we actually, had the courage to have the conversation about whether we should do it or not.
Yep. Okay. And then, so from when you built up that courage to have that conversation, where did you start? Like, obviously, did you have an advisory panel that would tell you, what is the best way to bring this to market? Or did you engage the services of a particular, company or like where did you start?
So one thing that I've been really fortunate with is like the board that I built around Airtasker, and that's primarily been built up from some great venture capital investors that have come on the journey, but also importantly our chairperson James Spenceley is an entrepreneur himself, and he's gone all the way on this journey, a couple of times before, and so having someone like that around the conversation was just so important because. When you even talk about an IPO, the dollar signs just start ringing for everybody. It's kind of like, it's a bit like a wedding. When someone goes, you're getting married, eh? It's kind of like, the photographers start coming, the wedding planners start coming, the venues.
Prices go up.
Yeah, prices just like, whoa. Because if you actually said, $10,000 or $5,000 for a photographer outside of a wedding, people be like, are you mad?
Yeah, like, we ain't paying that.
It doesn't make any sense. You're doing a day of work. How does this make any sense? But in the wedding context, it's like, it's expensive, but perhaps it's reasonable. Feels a little bit like that with an IPO as well. And so you got all these people sort of, very interested in talking to you at that point. So, and convincing you, obviously, that you should go ahead and do it. And so it's really good to have James, our chairperson, sort of leading us through those conversations with a cold towel around the head, you know, and calmly just telling us, you know, what the consequences of the different directions would be. At the same time, being an entrepreneur himself, you know, obviously loves to make things happen. So it was a really interesting meeting. It was a couple of our members from our board, but then also our COO, Yaniv, our CFO, Nathan, and a couple of members of our senior leadership team. And the way we sort of attacked the problem was to, you know, pretty simply assess all the different options for, you know, in the context of accessing capital.
Yep.
And so we said, you know, we could raise another private round. We said, you know, we could raise debt, you know, get access to loans and, you know, go in that direction. Or we could do the IPO. And when we sort of, we had that conversation and, you know, it was a very long day.
Yeah.
I think we started at 8 a.m. and we didn't finish till 10 p.m. or something. You know, we had some drinks and dinner in between, but it was a long day. And at the end of it, what we actually said is, let's just digest the information. Let's not make a decision now.
Yep.
Like, we've had a really awesome discussion about it, but let's get together in a week and actually make the decision then, because otherwise people are going to get sort of stuck in their, you know, whatever they've decided.
Right? Yeah.
Yeah. And then you get confirmation bias where everything you see, you're looking around, you're like, yes, I am smart.
Yep.
Wow. I am really smart. that decision must be the best decision ever.
Yep.
And so we actually let it live for a week and we got back together.
Yep.
Had a further conversation. And then the way that we actually ended up doing it was to stick Post-it notes on our head. So, you know, a little bit like...
celebrity head.
Yeah, like celebrity heads. Like, write down your answer and then slap it on your head. And it turned out that we all came out pretty aligned in wanting to do the IPO.
Yep.
And, you know, our CFO, Nathan, was probably the only person who started looking a little bit kind of like ghost-like and a little bit, you know... you're just thinking about the work that would be involved, because this was in early September.
Yep.
And when we talked about it, we're like, oh yeah, we could list in sort of February, March. And you know, you kind of think through all the stuff that you have to do, and you know, until you do it, you just can't believe how much is involved in doing it.
It's daunting, right?
It is. It's incredible, and I think it's different for every single IPO.
Yep.
You know, there's different issues to solve, so no one knows everything that needs to be done, and so. When we went down that route, he looked pretty nervous. He was kind of like, okay, there goes my Christmas, my New Year's, time with the family over the holiday break, you know, all those things. But, you know, I'm so proud. Like, the team just came together and it was such a great mission. It almost sort of gave everyone a bit of an adrenaline shot. And everyone, I think, had a really good time working intensely for about 6 months on this. Yeah.
And it's one of those things, I think, you know, I think with any new experience, right, there's always that that nervousness, right? It is daunting to begin with, and for a lot of people, they find it difficult to even, where do you start? You know, it's the fact that you don't know what you don't know, and having come out the other end of it now, do you look back on the experience and go, you know what, like, it wasn't that bad, you know, I could theoretically you could probably go away and do it again.
No, I think it's much worse than you could ever imagine. And actually, I think it's like an entrepreneur superpower, or anyone who sort of like runs something. I think it's a superpower to have a really short memory.
Yep.
Because you're right. I probably will do it again at some point, or, you know, do something else equally difficult in the future. But if you knew what was going to be involved on day one, you probably wouldn't start.
Yeah.
You know, you're kind of like, okay, so it's going to mean like midnight calls, like, you know, 3 days a week.
Yep.
No Christmas. Okay, what would that feel like? No Christmas? You know, like working on New Year's Day. I wonder what that feels like.
Yeah.
I'm pretty sure if you listed all those things out and rationally applied, you know, like a cost-benefit analysis to that, you'd probably go, let's not do it.
Yeah.
Let's just chill out.
It's
like,
one of those
why would I
things,
do this?
Yeah, it's one of those things that I think it suckers you in slowly.
It's exactly. Right? It's like climbing Mount Everest or something. Like if you actually told someone, you know, 1 in 10 people loses all their fingers, you know, you'd probably be like, I don't want to do that.
It doesn't mean that much to me.
Yeah, you got to be irrational and just have a crack, I think. And so that's what we did. We just had a crack. And, you know, I think that in any like modern company, having a crack is half the battle.
Yep.
You know, what you realize is you know nothing in most businesses, you know a lot less than you think you know. So like the upfront research, sometimes it helps, but a lot of the time you spend way too much time planning about what could happen.
You don't execute.
Than actually just doing it.
Yeah. Yeah.
And so I think that's half the battle. And actually, in that sense, it's a good thing to just throw yourself in the deep end and figure out how to swim out of it.
Yeah. I think, a lot of people get stuck on that. I think it's almost a bit of a lost skill, getting yourself into scenarios where it's like, okay, I may not know the correct answer here, but I'm going to piece it together as best as I can from the information that I've got, make a decision, and then see what happens, right? Because I think that's part of the, what is it? The correlation not equal causation thing, right? Sometimes you go, if I do this is the outcome, and you go, oh yeah, that works, and you keep doing that, and then you realize, hey, we've now built this system where we've got a massive gap, because even though that's getting us the outcome that we want, when you scale it, you start to see, where that doesn't get you the outcome that you deserve.
Totally.
And then the other thing that I thought was really interesting about that is that when because you're doing this experience with a couple of other people who are on the journey, right? I think that sometimes gives people additional confidence, right? Like if you only had like, say, a smaller probability that was against it and wanted to go with other means, then you sort of, get back together and renegotiate and sort of find that compromise. If you had a large proportionate of people that were against it, then you probably wouldn't be in this position, right? But at the same time, when you have that alignment in terms of, what is the vision here, and then once everybody's aligned with it, that actually provides you additional momentum, right?
Well, I think crises are definitely a strong motivating force.
Yep.
We talked about COVID earlier, actually.
Yep.
And I think that in some sense it's great because it actually really focuses the mind. It takes a lot of ambiguity out of the situation. It actually, in some sense, goes, there is one important thing to do now, which is address the COVID scenario.
Yep.
That's kind of, in some sense, more straightforward and aligning than something more ambiguous, like, oh yeah, we really want to grow the company 50% next year. I wonder how we can do that. That's ambiguity. There's so much room to think and etc. And actually, I think, throwing yourself in the deep end, almost creating yourself a crisis is kind of a good thing. It really says to everybody, okay, that's the most important thing.
Yep.
We don't need to think anymore. That's the most important thing.
That's Sebastian Junger's book, Tribe. Have you read that one?
I haven't. No?
He's basically talking about how, in times of peril or dire peril, that's when you get the most out of community because people have to band together. So as much as it's horrible to have, these catastrophes, whether it's a natural disaster like bushfires or floods, but when you have something like that, it can be very motivating, right? Because people band together, they have a deeper and more profound feeling of what is for the common good. Right. And I think, I think it's the same in business, right? Like if you can get people to connect on that common ground of, hey, we need to get through this as a business and we want to get through this together. That in essence, actually, it chunks down those steps, and when I was talking about, getting suckered into the IPO thing, it's like, you've sort of broken down these individual steps and chased these little goals along the way, not necessarily having the big goal in the back of the mind. It's just that was the next logical progression in terms of what was to come, right?
Yeah, and I think I think one of the things is like it's good to when you're in these crises or in these really focused states, you can kind of get over some of the smaller niggling things. You're like, well, in the context of delivering on this mission, that's not a big issue, and you can kind of just get over it. And I think generally that's probably a good thing. Yep. Sometimes it's not a good thing. I'm sure that some of those issues like, oh no, we really should have solved them. But I think what can happen, especially as companies grow and get larger, is people don't want to deal with mess. And so they'll avoid mess.
Yep.
But sometimes mess is necessary to get into the next stage.
Yep.
In the case of an IPO, it might be like, yes, we need to have X, Y, and Z done. Sure. Maybe our organizational structure won't be perfect when we get to the other side of this, but we can sort that out later. Yep. And everyone's like, yeah, agreed. Let's go do that.
Yep.
To some extent, that makes things easier and more aligned, I'd say.
Yeah. So, like from a car sales perspective, right, I always say to my team that you need to find the objections first of all before you can overcome them. Right. So, there's no point going through the process and just assuming everything's all kosher with the customer if they have some grave concerns that you don't address at any point in the sales process, then it's never going to come to fruition in terms of a deal, because the moment you want to convert it into a deal, the customer's going to be like, oh, but, I require a car that has, 7 seats. And it's
don't kick the can down the road on addressing those problems, right?
Yeah, a problem deferred is a problem magnified. I think that's the saying. And, from when we talk about it from that car sales perspective, it's having that transparency, right? Like, if I think about it like we're playing poker, if I actually just lay my chips, my cards on the table and say, look, this is where I'm at, let's see where you're at. But rather than saying that it's a win or a lose, it's like, well, let's negotiate to see how we can split this pot, And I think that when people get their head around that, it's a very powerful sort of concept that you can apply in life as well as business, right?
Definitely. I think one of the things I've actually been realizing is when you're the CEO or founder or something like that, you can feel like the pressure is on to have all the answers, because you should have all the answers. You're the boss.
Yep.
Everything's gonna ultimately fall down to you. But what I've actually discovered is that it's kind of better to just be transparent and say, look, here are some things I know. Here's the context of the situation. What do you guys reckon? Because I'm feeling this, but don't pretend to have all the answers. Be really transparent. I just don't know yet what the best way is. I feel that it's quite liberating for one. You just kind of like, you don't feel like you're
have
an
to
imposter.
carry the weight of it. Yeah.
And you usually get to a way better solution too. Like 80% of it, you might have known what the best thing to do
Outcome
is,
was,
but 20% of it, I tend to find is like, oh, geez, I actually heard something that was way better than what I was going to do. I'm so glad that I didn't go into this conversation, acting like I knew what all the answers were. So I think that whole transparency thing and bringing people along on the journey with you in some of these crises can be super valuable. And I can say so genuinely, during the IPO process, it was definitely like this massive team effort. Like there's just no way that any one person could sort of on their own lead people through such a complicated process. There are specialist lawyers, there are specialist accountants, there's people who internally know the business better than anyone else. And we all had times in which we were the leader of our area. But we also, fell in line and worked when other people had to be the leader. And it was it was actually a really amazing process that I think so many people came out the other end as really having a notch on their belt, or, whatever you want to call it, but they had an extra feather in their cap or something, and it was pretty cool.
I'm going to digress for a second, because you made me think of something that you said in our first podcast. And what you were saying is that, as a leader, it's really important to know your weaknesses and, be open and transparent about your mistakes, right? So, I'm going to sort of open up the timeline a bit here, but I guess looking back on the Airtasker journey to date, what were some of the biggest learning experiences for you? Like, what's a mistake that really, you might still feel not bitter about, but like, sore about when you think about it and you go, oh, I can't believe I did that. But you learnt such a strong lesson from it.
Look, I would say probably one of the bigger ones would have been around hiring. I think that, even sort of 3 years into it, our hiring processes were were way too lax. Like we didn't kind of think about the kinds of people that we wanted to hire, specifically how we were going to identify whether they had the skills and the abilities and the values that we needed, and the knowledge that we needed. And I think we could have put in a lot more effort into that. And I think because of that, we went through a fair bit of drama that was probably unnecessary. And we probably hurt a lot of people that was kind of unnecessary. Hiring people, I think it is the manager's responsibility to make those hires correctly. And when you get them wrong, it's your fault. You didn't scope it out properly, or you didn't identify it properly. And when you take that lens on it, I think that, we could have done a lot better job. And it was just a lot of naivety and, going through that motion. So I don't think there was any malice in it or anything like that. But I think if we'd put a lot more effort into that at the beginning, then we wouldn't have gone through so much heartache and pain for lots of people.
I think that's definitely something that every business and every business person needs to consider. And I think the other part that goes hand in hand with that is the actual induction process, right? Because you could hire the best candidate in the world, but if you don't induct that person thoroughly into your business, then the propensity for them to have switched off from the first day is like, they're thinking, oh, wow, I've joined this great company. And then they come in and their first day is a shit experience. And they're like, oh, this isn't what I expected it to be, and straight away they're having second thoughts about taking the role, and I guess, from a business perspective, most people will have to do a probation period when they start at any business. But that probationary period is a two-way street. It's not just for the employer to assess the employee's fit. It's also for the employee to assess their fit into the company as well. Right. So, okay, let's, I was doing this with my wife the other night because, it's been like 10 years since we got together, right? And so we were talking about, one of the things I always like talking about is that, when I think about comparisons, right, I only like to compare myself today versus who I was yesterday. Am I a better operator today? Am I a better person? Am I a better husband? Am I a better father? Those things. Am I better as a martial artist? They're the things that I like to sort of use as my sort of benchmarks. And I guess, it's been, 9 years since the genesis or the official start of Airtasker, right? But if we go back to that, the Tim Fung of 10 years ago, let's talk through, because I don't think we covered the genesis story of Airtasker in the initial podcast. So let's cover that and go through some of those. What do you think your growth and learning was along the way?
Well, I think, so first of all, we started in 2012, although the idea came about in 2011.
Yep.
And it was actually, our friend Ivan,
yep.
He helped me move apartments, and that just made us think, why do you ask friends and family to do all these kinds of jobs for you when there's so many people out there who would love to be able to make an income doing this kind of work? So it just kind of got us thinking like local services, it's totally broken. There's no, sort of seamless and simple way to do it. Can we do that?
Yep.
So that was sort of the genesis for the business. And I think, in terms of development during that journey, I think that, one thing that's remained is I'm happy to just jump into something and give it a crack. And, if it doesn't work out, my wife kind of tells me could be considered the world's biggest flaw, or it could be a strength, but it's like, I'm just not that embarrassed by it.
Yep.
Like to say like, oh yeah, I tried, didn't work out. Sorry about that.
Yeah.
Like that doesn't really worry me that much. And so I think that naivety and all of that still kind of still shines through today. Always willing to kind of give something a crack and just have a go and not be embarrassed. In terms of, I think, what have, how I've progressed individually, I'd say probably the biggest thing is trying to be more reflective and honest with yourself about what your motivations and what you do well and what you don't do well. So being really honest about those things. And then also being able to have difficult discussions with people and direct discussions with people on a similar vein. Some of those things that can be really uncomfortable, and I think what you realize is you probably overestimate how uncomfortable those conversations are going to be. We even, talking about even like having to let someone go, for example. I think that's something that in the early days, I would have really shied away from and just said, I just can't deal. I just can't deal with this. Let's just keep them, or convince yourself that it's a great idea that you should just keep them.
They deserve this role in my company.
Yeah, like, you probably just come up with a million confirmation biased, excuses.
Yeah.
But I think, trying to be reflective of that, be honest with yourself about when those things are not actually the truth and you're just convincing yourself. And then, having the courage, I guess, and the experience, by the way. It's not just courage. I think it's also, you've gone through it enough times to know that it's not going to be that bad. I think that's probably where, I've learned the most over the last sort of 10 years. And I think that when you have those direct conversations, it's just incredible what happens from that.
You can have an ultra positive outcome, right? Like that's the thing that people don't think about.
Most of the time it is.
It is.
And even even in that example, which most of us would think of as a complete negative, like having to let someone go or move someone on from the company, in most cases I've seen, that person goes on to be so much happier.
Yeah.
Like it wasn't going to work out.
They might flourish elsewhere, right?
Oh, absolutely. And so I think, it's almost become, it's felt like a negative thing to say, letting someone go.
Yep.
But I actually kind of think it's, you can actually reframe that, but you're really giving them an opportunity
Yep.
to do their best work somewhere else.
Well, it's like people that there are people that stay in relationships that aren't good for them, right?
Yep.
And they find it difficult to pull that trigger for themselves. Being in a job is like that as well, right? So
Totally.
being employed in a company that you may not be happy with, if you don't come to work and you're not excited or happy to be at the workplace that you're at, then sometimes perhaps being in being in that relationship is preventing you from finding other relationships.
Absolutely.
Being in that job or occupation is preventing you from finding those other better jobs and occupations. So, one of the things that I think that I was just thinking about that I like a concept that I really like, and I don't know whether it's like a feng shui kind of a concept, but it's called Tian Di Ren, so heaven, earth, and man, right? And the idea behind the concept is like when you're born into this world, really you can only ever influence 66% of what's going on. Right, so if you think about it, you as a person, so your personal choices and your power as a person, that influences 33% of the world, right, or the world that you live in. Your environment, so the environment that you place yourself in, the people, the friends that you keep, and your family, that represents the other 33%. So the earth part of it, all right. But then there's that 33% that's related to fate or heaven or deterministic, whatever you want to call it, determinism or whatever, that you can't influence, right? But I like to actually take that concept of living life in thirds and think about it from the perspective of, I think as people, a lot of people don't spend anywhere near enough time self-reflecting as they should, right? So if we think about, before we go on to any endeavor, let's say it's like, doing an exam, right? You spend a lot of time doing your preparation. Right? Then you have the part where you do your exam, and then, in school, typically, over your course of your years, you'll reflect on your mistakes, learn what you did wrong and how you get better, right? But then, somewhere along the journey when you finished with schooling and all that, you don't really get into the workforce and people say, hey, you probably need to reflect on, the outcome that you've gotten, right? So, you spend all this time preparing to do this job, you've done your job or whatever, and then it's like, oh, that task is done. We just put that in a box. Let's forget that knowledge and move on to the next thing, right? And so, I really like that self-reflection part, because I think it's if you're being really honest with yourself, sometimes it's really hard to actually, if you might have an overinflated view of yourself, you might have an underinflated view of yourself. But irrespective of that, you need to have an honest look at yourself and go, okay, in that interaction, what could I have possibly done better? What could I have done worse? Right? And sometimes it might have been a great outcome from that conversation, but that doesn't mean that you can't reflect on it and go, hey, I'm really happy with how that went, so that now I have a reminder or a process for the next time I do that conversation. How do I now imitate that similar sort of successful outcome? Right? So talking about, successful outcomes. So from the genesis of having, that thought with Ivan, how did that then lead you to doing that first round of funding? And then how did you even get, your foot in the door to be able to pitch it?
Well, I think, as you mentioned, as we talked about before, like just getting off the ground and doing something, I think is sort of critical.
Yeah.
And so we knew from the early days that funding was quite important for a marketplace, because it's actually building a marketplace is actually kind of like building infrastructure. Yeah, it's similar to building a telco network or a series of highways. You kind of need to establish the highways or the telco network before there's a lot of value actually being enjoyed by customers. And so we knew that you kind of needed to fund that. Obviously, it's not the same kind of funding as like a telco or a road network, but it is upfront funding. So we went out to our network, and back in the day, there weren't really like venture capital funds or anything like that.
Yep.
And so we raised mainly from angel investors.
Yep.
Fortunately, my co-founder Jono and I had both been part of another startup before this called Amasim,
Yep.
which is a mobile virtual network operator. So we had a little bit of we'd built some trust with some individual investors, and so we tapped all of them on the shoulder and were able to raise around like that. One thing I would say, obviously not everybody has had the opportunity to be part of a funding story before they go out and do it on their own. So I'm very thankful for that. But conversely, I think that back in 2011, 2012, there wasn't really much of a funding market at all. And so, I think these days there are actually more established paths for being able to raise money from angel investors and stuff. But if I was to give like one lesson away, I would think it'd be like, speaking to venture capitalists and stuff is okay, and it's definitely a route that's worthwhile kind of looking at. But I wouldn't put all my eggs into that basket too early on, because it's few and far between that they can invest into. And actually, I think especially for like risky entrepreneurial startup ventures, you probably want to be speaking to ex-entrepreneurs first. People who have also been on a similar journey and said, yeah, it is pretty crazy. I know you don't have it all figured out, and I'm happy to punt on you and maybe help you along the way as well.
So just talking about raising funds, right? So have banks become more open to? Have banks become more open to it over the years, or is that something that's still because it's very out there?
Well, it depends. I think that there are some types of ventures that you can do finance and bank loans and stuff like that for, but most if you're talking about like software technology, which I think a lot of people are talking about when they're talking about internet startups. No, there's absolutely no chance you're going to get bank loans or anything like that. I think that, your sources of capital are sort of self-funding, via bootstrapping.
Yep.
So just don't spend a lot of money. Then you don't need a lot of money.
Yep.
I think there's sort of friends and family that you can go out for. And, that's always risky because you got to remember if you lose all their money,
they're going to be pretty upset with
you. You want to think about, what Christmas dinner kind of, feels like if you've lost everyone's money.
Getting daggers from their eyes.
Exactly. And then I think the third is sort of go after high net worth individuals and entrepreneurs and stuff. And I've personally found success in that because I think they kind of get it and they get, as I mentioned, you don't know everything yet. There's going to be a risk here, and it's usually a little bit of, entrepreneur to entrepreneur saying, I'll take a chance on you. So.
No, absolutely. All right. Well, we're gonna end the podcast on that note. We'll have to catch up again in the future and do it again for round 3.
For sure. Love it.
Thanks, everyone.
Thanks, Johnny.